All right, hey guys, here we go. We are in the flow with another Elliott Wave video. Hope you had a great Christmas. Looking forward to 2025. Let's dive in with the crude oil chart, and we're going to go crude oil, some metals, and the dollar, and a little bit of Nasdaq just to keep you interested. All right, here we go. Starting with oil. All right, so here's a daily chart. Now each week I kind of give you a quick review of the daily chart at the top of each video. So I'm not going to go into it again here, but this is the overall daily view going all the way back to that top 130.50 on the continuous contract. And then we came down in three waves, and then I believe wave 4 is done, and we are now trying to finish off wave 5 to find a bottom. Now, when crude oil or any instrument is moving in threes, it's more complicated. It's certainly easier, like in the case of gold, where you have a clear, impulsive move up off the lows, gives us much better odds of finding the right fibs. Whereas when it's moving in threes, it takes a lot more experience and a lot more, in my case, a lot more time to make the measurements, to try to discern which fibs are in play when it's moving in threes. So as you can see here, this does track as an A, B, C, D, E, which is a typical Elliott wave triangle, right? 5 waves, and in this case it's a contracting triangle because each low is higher, right? It's making higher lows and it's making lower highs, but it's not making any net gain. And in my case, I like to use this pivot, which is an Elliott wave thing. So it had no chance of getting above this pivot. So in other words, no new highs, and it never made a new low below this low right here where I've got the wave 3, which is why I think 63, 64 is a very important level. Now on the way up, you can see that that level, yeah, we were below that level. If you just want to, just for grins, sometimes I'll do this. I'll just drop a level over here because between these two levels, you can see that price made 3 higher lows. I mean, if you go back to this low, it's making higher lows. And this level was one of those levels it kept coming back for and testing. And each time it passed the test with a little greater score, meaning a higher low. So then if you just follow over to current price action, here's that wave 3 that tagged again the very top of this level, which actually you can see it originated. Geez, man, if you look at that. Now you watched me throw that level on here. Look how many times price has interacted with that new level that I just put on there, which is right here. It's right there. It's interacting with it. I know it's hard to see, but it actually interacted with it right there. Look, it back tested it right here. It consolidated right there. Then it finally gave out after back testing this level. Then it came back up. Look at this. And then it hit this level. And then this time it kind of consolidated right there at that level. Yeah, it crisscrossed it. It's not perfect. These are zones. But look at this. Tagged it a little higher, came down into the zone, bounced, came back down, tagged it there. So the reason I'm sharing with you that zone is the next time it breaks below this zone, right, the 63, 64, that's an important level. If you break below that, I think the odds are you're going to see a couple more dollars to the downside. Now, the pivot is really interesting because the pivot, this is an Elliott wave thing, it's the 618 to the 764. But of course, you have to know how to get to that, but I'm not going to get into that for the purposes of this video. But what I am showing you is that this is a large degree measurement here. These fibs are derived from a large degree higher time frame, weekly, daily Elliott wave chart. So, and look at what price is doing. It got about halfway into the pivot, massive reaction, coming right back down, and it's just consolidating in this range above the pivot. So the idea is, and there's a nano pivot here, which is a lot less important to me at the moment, but what I'm saying is if this thing cannot make higher highs and it comes down and starts making, if the next move is a lower low, that's going to open the door to keep making these lower lows. And then the holy grail is, I mean, the target, if this does come down and start making lower lows, I think a reasonable target is 63, 64, where you could see a bounce. But the ideal target is for this to come smashing through all the way down into, just call it 60. You can see the fibs. It's just fibs, right? So let's drill down a little bit. Let's get into a closer look of, now look, this is an 8-hour chart. I'm sorry, I thought it was a daily chart. This is an 8-hour chart. And what I really am looking at and following on this 8-hour chart from week to week is, are we making new highs? Yes or no? No. Are we making new lows? No, not yet. So this thing is very clearly chopping in a range, but it's contracting. The range is contracting. So call this the real range. This is where I've got this wave 1, 2. That's a massive range expansion just inside of here. That is a range expansion. And then all it's doing since then, it's consolidating in a range. But do you see how the range is getting narrower and narrower, as evidenced by these simple trend lines I'm putting on there, which I don't trade, but they are clues. And if this is a triangle, similar to I just showed you in ABCDE on the larger time frame, remember I was calling that the wave 4 triangle? This would be potentially a B wave triangle. Why? Well, because we are in a diagonal. So in a diagonal, the biggest difference is, unlike an impulse where waves 1, 3, and 5 are composed of 5 waves, in a diagonal, waves 1, 3, and 5 are composed of 3 waves. So if this is the end of the diagonal, which is, there's the E wave, right? A, B, C, D, E, which I've already shown you. If you want to clarify that, go back, rewind the video, look at me showing you the triangle in the wave 4 position. And then what you have is a potential 3-wave move down for wave 1. It measures very well as a 3-wave move. Then you get a 3-wave bounce for wave 2. And then now this is where, unfortunately, the clarity is far less clear. Clarity has left the building. But you know what? In Elliott wave speak, sometimes when it's not clear and it's chopping and overlapping and moving in 3s, that in itself is a clue. Okay, what is a clue of in this moment is this might be a B wave triangle. Why? Why do I say a B wave triangle? Because wave 3 in a diagonal, wave 3 projects down to here, is going to be composed of 3 waves. So basically this came down in what could be an A wave. This could even be a diagonal in itself for an A wave. So I hesitate to label these because in the way I trade and the way I use Elliott wave, I'm not married to the labels as much as I am married to the measurements and the price action. But the idea would be that somehow it's going to be an A, B, C. So wave 3 should be composed of 3 waves. So like, what's going on with wave B? Well, part of this is very similar to the E wave over here that the end of the wave 4 triangle. It's like, do you put the 4 here, or do you put the 4 where the A wave is? But either way, this thing moved in 5 waves and classifies, meets the criteria as a triangle. So if this is, because an A wave could be 3 waves down, or it could be 5 waves down, doesn't really matter. I'm calling it an A wave, okay? So really the question now is, how would you count a B wave triangle? Well, do I really care? I'm not going to spend much time on this because I'm more concerned about the levels and I'm more of a day trade scalper. But, I'm going to put it on here. So if that's an A wave, if that's the A wave, then you already know that a triangle is going to have 5 waves. So 1, 2, and this is where it gets, where do you put it? Is this the end of the triangle? I've got to turn off the magnet so I can move these things around. Is this the end of the triangle? And this is, wave 1, this is 2, this is the beginning of the C wave, like 1, 2, I guess could be. It's also kind of you could also put, this is a lower low, so it's tempting to move the A over. It's tempting to move the A over here and do like this, A, B, C, D, E. this would be the top of the E wave, or if it comes up a little bit without making a new high, maybe that's the E wave, right? But the issue I have with that is if this is the A wave, this is much better looking as an A wave here, because if you make this the A wave, then how do you count this thing? Because this would be a very difficult, it doesn't make sense, is what I'm saying, is what I'm trying to say. So, and I'm going to move on from this, okay? But that's just the way you think of it in terms of the triangles. You're looking for 5 waves, and in this case, it's a contracting triangle. There's different types, 3 different types, probably more than 3, but really 3 major categories of triangle. This is called a contracting triangle, which just means it's contracting up from the bottom and it's contracting down from the top. And as it gets closer and closer to being finished, it's going to react strongly, which is why I'm going to keep trading to the short side. I mean, I'm scalping both directions, but I'm more interested in scalping to the short side than the long side. Especially if I'm going to hold a runner, because if we get lucky and capture a short at the right time, it could be a major move. All you're looking for is a massive move down, because it's wave 3 of C that is going to be the juiciest move down. I mean, that kind of move is what you want to trade for. So keep that in mind. All right, so look, now that I've talked enough about an 8-hour chart and getting into the weeds of Elliott wave, let's go down to the 4-hour chart. Now, again, just looking at Elliott wave only in a very practical manner. I'm only counting and looking for what is most likely in the immediate area that we are looking for. And, my idea was you get a 1-hour candle close in this box and we're going to go lower. If not, trade to the long side. And we did. And these arrows, my arrows that I put on here, have certainly turned out to be decent guidance. I've taken a lot of them off to clean up the chart. But here's the point. So we came up into this sell zone, got a great sell, came all the way back up literally to the penny. Price came up to the penny. And you see crude oil do this a fair amount. Do I trade a double top in itself? I mean, not particularly. But hey, it came back up into the same sell zone, and it did get rejected. So the idea here is maybe that is the top. Maybe that is the top. So the best I can give you is parameters. So if this, now look, the best way, okay, so let me give you some parameters. 7102 is the top. 7102. Now, by the way, this is the February contract, February futures contract, and it's the NYMEX data feed. February futures contract, NYMEX data feed, February contract. This is a 4-hour chart we're looking at. 7102 is the last high. That's an important level. You can see we got close to that level. We came up into this wick and we got rejected and created another wick, but then it came back up and grabbed almost, well, I mean, it did grab all of that wick. It created just another smaller wick. So it is possible that that's a top. There's a double top there. It's in an area where you expect rejection. So, I don't love this as a lasting top just because from an Elliott wave perspective, I guess this, ABC, what? How do you count this right in here? So, but the way I would think of it is simply with parameters. That's the best way to think of this. So if it can't get back above this high again, if it does come up and get back above this high, I mean, as a scalp goes, you can definitely grab 20 pips if it comes back up. Because if it comes back up, I think, in my view, it's definitely going to break this level. Okay, but the next meaningful level above that is 71.97, which is taken from to the left over here. That's the last meaningful high, 71.97. So these are your parameters I'm giving you. 71.02 to the upside, 71.97 to the upside. My bias, it continues to be and has been to the downside. So obviously, this is a key level right there. Let's just go ahead and mark that. 69.33. All right, I'm going to go ahead and label that just so I know at a glance. That's a important level that if you're bearish, you want to see that as a target. Okay, now we're going to do the same thing we've been doing, which is drop down the level. Right, we're going to go down now to the, wow, now this is really nano micro in here. So you can see this is that double top area, right? Here's the first top. Then we came down, bounced like a maniac, came back up here. It's very difficult to figure out how to count this at this scale, but this is what I do. So the best thing I can say is that parameter here's your 70, 75 parameter. What was it over here? Okay, 70. Oh yeah, that's these levels right here. Okay, so that's these double tops is 71, 70, 75 is the double top. This is the second part of, this is the second top of the double top. 70, 75. And the idea is this is some kind of an impulse down. All of these look impulsive down, but then it just keeps coming. It looks like an impulse up as well. None of these measure cleanly as 5 up. Okay, you could argue this is 3 down. You could also argue this is 5 down. So here's a way I'm going to deal with that, because I do not know. I'm so sorry to disappoint you, but I do not know the future. So, but what I do know is Fibonacci. So here's the way I'm thinking about it. The main two ideas that I'm looking at right now is if this is a wave 3, then the wave 4 is going to come up here into these yellow fibs and get rejected, and then it's going to come down, and I like this idea down here for a final wave 5 right here. And all of this, if this completes as I'm suggesting, if it comes up and holds below, just call it 70.46, which is just above this zone. If it can come up and get rejected in these yellow fibs and then cough up another 5 down, which would be wave 1 of 5, wave 2 of 5, wave 3 of 5, wave 4 of 5, and then bam, wave 5 of 5 of 1. What this wave 1 would confirm, or at least shift the odds dramatically, if this can come down here to below 70.0, isn't it interesting? 70.02. Were we just talking about 70? Oh no, 71.02. So it's exactly $1 below. Yeah, this low right here is 70.02. So that's exactly $1. So if price can come down and get below 70.02, if just come down and tag it, or at least make it to this level, 70.02, before it comes above 70, just call it 70.50. You want to see it come down to 70.02, somewhere down here. That would complete 5 down. Then you can look for a bounce that would be a proper wave 2. Okay, so I know I'm talking a lot. If you're an LA wave guy, you know exactly what I'm saying. And I'm probably spending too much time on it if you're an LA wave person already. If you're not an LA wave person, hopefully you're making sense out of what I'm saying. So if this is a wave 4, right? Because in order to get a wave 5, we have to get a wave 4. Well, we have parameters for wave 4. Typically it moves in 3 waves. That's what these yellow fibs are indicating. Typically wave 4 falls between the 236 and the 50% fib of the entire length of wave 3, from the very tippy top all the way to the bottom of wave 3. The blue zone reflects where this bounce should be terminated if it's a wave 4. So I'm giving you 2 ways to consider if it's a wave 4. One is the blue box, which is kind of a general thing, and the yellow fibs, which are me measuring this as 3 waves, meaning A, B, C. I'm going to go ahead and label that just because. All right, wave 4 is often composed of 3 waves, and if so, it might play out something like that. A, B, C, reaching up, getting rejected, contained, whatever you want to call it, somewhere in these yellow fibs. I would also expect after the open, regarding not including any gaps or whatever we may have. I mean, what I'd love to see is a massive gap up, and then it run up a little bit, and then come down and close the gap and keep going down into here. That would be ideal, but that's just me yapping. So, but here's the idea for LA wave. Listen, it could come up and make a higher A and then come down and make a lower B. It could really do anything in here. Also, Sunday night, my experience is that this could take a lot of time and just go sideways. And really the real action I'll be looking for is like 6 a.m. in the morning on Monday, which is like way over here. So, I mean, wouldn't that be crazy if this does complete a wave 4 overnight, if it just chops in this range, completes somewhere up here in, in midnight or whatever, and then finishes off down into here for the morning, and then you start off with a bullish Monday morning. But then we'll be looking for that to move correctively so we can short it. So these are the parameters, all right? And that's really all I got. You got 70.50 to the upside immediately, and you got, just call it 70.02 to 69. You know, it's like a 30 point, 20 point. Oh, what am I talking about? Oh, geez, that's nothing. I gotta remember, this is a 3-minute chart here, by the way, guys. So this is very tenuous. It's better to just pay attention to these parameters that I've set up over here, with this being 70.02 is this low right here. Okay, so you got a dollar window right here for this thing to figure out its midlife crisis. Is this dollar range right here on the 3-minute chart. This is going to determine what comes next. And hopefully by Monday morning at 6 a.m., we're going to know. All right, dang, sorry this went too long. My bad. Here's gold. I finally switched contracts to the February contract. Do I think wave 4 is done? This is a wave 3 top, wave 4. I keep saying the same thing every week. I think it needs to take more time off the clock. Even when this bottomed here, and a lot of folks were like, oh, it bottomed. I was thinking, nah, I don't think so, because it didn't burn off enough time. How about this? It did make a higher low. But you know, it still didn't burn enough time off the clock. And does this really look impulsive? Look at this structure right here. Could that be impulsive? Yeah, like an ABC. Yeah, I guess so. Sure, but I don't love it. It doesn't look clean enough what I would want to see. You know, when the low is finally in, I'd want to see a rip-roaring reaction. I mean, I guess you could argue this is a rip-roaring reaction, but it didn't continue. And look at the rejection it got. You know, so if this is really a 1-2, which is what it would have to be if you think the low is in, this has to be some kind of an impulse, and then this has to be a 3-wave pullback. So I don't really see it like that. So I think gold has to burn more time off the clock and come lower. All right, now let's drill down a little. So parameter 28.26 is the upside parameter. 28.26 on the February futures contract, COMEX data feed. 28.26.30 is the ceiling. 23.72.60 is the floor. I don't think we see below there, although certainly could. What I'd rather look for is a 5-wave move, and really, let's drill down one level, because really what I need to see is a 5-wave move down. You could argue this is 5 down. 1, 2, 3, 4, and this is wave 5. And then now we are working on a 3-wave correction. And again, I don't like, just like I was telling you, I don't like this price action. This would have looked so much better if this did not come down so deep right here, because ultimately what I was looking for is are these yellow fibs to get hit. Well, guess what? It just barely did hit that 100 fib. It just barely did. And what that means is the way I measured this is as an A, B. So could this be the C wave? Is that all you get? I'm trying to grab this question mark. Is that all you get? And then now we're building the next impulse. Well, if that's the case, this is not going to come up and make a new high. If this does come up and make a new high, I've measured for another 3-wave move, because if this is not the A wave, it's possible that the question mark is the A wave. This is the B wave. In other words, it's just making a larger 3-wave correction. Okay, so this would be the A wave. This would be the B wave, and then this yellow fib way up here would be the C wave, and all of this is fine. It's chopping in a range. No problemo. And really, that, because of where this has come to now, I want to move this parameter. That low is 26.96.70, 26.96.70. So I'm going to move this down. Let me just adjust these. And the reason I do this is for my own clarification. So at a glance, when I look at my chart, I just know what the key levels are. Okay, so 26.97, the way I think of this is a key level, important level. Now, just because I'm looking at this yellow fib right here, I'm going to see where the extension comes. Yeah, so, you know, if this wants to bounce this week and come up, you know, I already know this does not look impulsive to me because it's already overlapping so much. So I'll let it, if it comes all the way up into here, I will be attempting to short it from up there. So this is just an idea. Call it a trade idea. And I know it's a lot, okay? But what I do during the week and what I do inside of the Professor Trades Club is I go down, this is a 4-hour chart. I'll go down to the lower time frames and still try to dial it in best I'm able to, using all the way down to the 3-minute chart like I just showed you in crude oil. But I'm not going to do that right here in gold. If you're inside the club, you're getting that information. You know, if it comes back up, I would not be surprised to see something like that. Okay, that's if it's a wave 2. Now, yeah, you can see in the club, we did scalp this to the upside. It was beautiful. And so what I'm saying is it could not make a new lower low below 26.23, and it is coming back up. So, you know, if it wants to come back up, I think this is it'll make a higher high, and that's the next place to be actually shorting from. Okay, so that's gold. Now I just got to breeze through, man. I've already spent too much time on crude oil. Similar to gold, I'm looking at daily silver chart. Now the big difference between silver and gold is silver actually did come down and tag the 382 fib, which is the ideal target for an A wave. Unfortunately, it would have been so much better had the first decline that we totally nailed, by the way, in the club. It would have been much better had that come down to the 382 and then bounced, because then I'd be much more confident that this is going to come down here. But because the second time it came down, it tagged the 382 after what looks like 3 waves down, arguably. So the best I can do is, if this is 3 waves down, this should be a wave 4, and we're gonna come down one more time lower, and this could be the bottom of finally wave 4, 27.89, meaning 3, 4, 5. Now, I've already burned a lot of time on this video, but I know some of you guys are drinking this up, this LA wave stuff, so I'm gonna just throw on a ratio here, which I do. I'm curious. I want to throw on a ratio, because if this is wave 1 through 3 to here, and then let's just say that wave 4 has already topped here. I just want to see what this ratio would be, and where that yellow fib down below that I just told you about at 27.89, I want to see where that wave falls in relation to this ratio right here. Ha! Look at that. That's called confluence. And it's not a prediction. I mean, I always get amazed at how these things fit together. It doesn't mean that, oh, refinance a house and go short gold because silver because it's going to that box. That's not what I'm saying. I'm just doing my LA wave work, 29.14.5. So let me move this over a little bit. 29.14.5. One thing about LA wave, I usually use a magnet and I try to get it exactly on wherever it's supposed to be. All right, so if this is going to come down, you know, this is a very reasonable, look, for a wave 4, that's a 382 fib in blue for a wave 4. It tagged it, it bounced. This is the next, anywhere in this zone could be wave 4, but the next fib for wave 4 on the blue idea is 50 fib, which is right in the middle of this ratio box, which is just exceeding the 100 fib in yellow. The next fib down below that is here. But so you've basically got 3 confluences of fibs. You got the yellow fib at 27.89, you got the ratio box at 27.90, and you've got this blue fib, and all of these are zones, by the way. This is just zones. So, you know, the ratio box gives you a zone, right? And that's the zone. And then the wave 4 target 50% fib is right in the middle of that ratio box, and then the 100 fib in yellow, if this is a 3-wave move down, finishing off the C wave, meaning this is a B, and this is the 5-wave C wave. This is ideal. So, but the thing is, because it hit the 382, and if you've been following me, you know I was talking about 29.29 like a month ago, 29.29, and we couldn't make it down to 29.29. Well, here we are at 29.29. If you're an options trader, that kind of information is great, you know, long-term over time. So here's the deal. If this is 5 waves up, which it could be 1, 2, 3, and then wave 5 is a diagonal, then you want to get long down here. That's why I put the sell way down here, because if this doesn't hold this, here's your parameters for silver. I know it takes me a while to get to the point. I apologize. I'm torn because I'm an educator, and I'm torn between explaining. Like I know if I just give you parameters, then I'm not explaining enough. If I explain everything or even half of what I'm really looking at, then I'm talking too much. So I'm trying to do both in the same video. I'm trying to give you levels and teach. All right, so if this is 5 up for wave 1, then the wave 2, I mean, it's holding the 382. You know, it could bounce, it could come up into here and then give you another low, but hold, generally you'd want it to hold. Oh, I see I got to move this up over here. You want it to hold roughly 618 in general, although silver is so volatile, it could exceed that and still be a wave 2. So 3048 is really where, oh, actually though, 3, I'm actually going to count that as the top of wave 3 because, well, 3, 4, no, I'll just put it all the way up there and just call wave 5 a diagonal. So it's 1, 2, 3, 4, 5, and then now you're getting a wave 2, maybe, or you're getting the first wave. That's why the sell box is here. If this is going to go up, okay, if the bottom is in, now this is one of the few things I can say with confidence. If the low is in, you're not going to come back down into this zone right here, below 29.29. Okay, so this can come up. This can come up again because it's hanging out of the 382. So watch this area right here. If this is not going to come up again, if this is just going to come down, keep coming down, one clue is it ain't going to come above 3018 first. If this comes above 3018, it is possible, as long as it doesn't get above here, it's possible that that's just a B wave and you're going to come back down again in here. So the parameters are 3074 to the upside. And you can see I got a buy box up there because in my view, this is either breakout or break down. Breakout or break down. So if you want to get long, you see it coming down, this is about where you want to do it. You do not want to be long below 29.29 in my estimation. So you can just look at these fibs. If you pause the video, write these fibs down. And whenever you see a box on my chart that says sell or a box on my chart that says buy, remember that the way I'm doing it, this is what I learned from Armando. Look for a 1-hour candle to close inside of that box and then look for it to back test. That's where you want to layer into your shorts. And stay small on the first position so you can layer in. At key levels, you want to layer in so you can get bigger. If it's not a key level and you're just scalping, and I would just keep it simple and trade with 2 small positions. Take one off after 20. Anyway, blah, blah, blah. So there's silver. Man, I got to keep this moving because I know it's getting long-winded here. I'll just take a small pause right here to say, I appreciate you. Thanks for watching. If you're getting value out of my videos, give me a like, would you please? It helps YouTube put the video out to more people. That's what keeps me going. More and more people watching this, people commenting, people inside the Professor Trades Club saying thanks. They're getting some value. They're using it in their trade plans. They're using the Elliott wave along with the professor whose name is Armando. By the way, you're going to come in the room. If you join before January 1st, you're getting all the Elliott wave stuff for free, which I'm posting every day in the Professor Trades Club. The link is in this video, by the way. If you join now for less than $1 a day, you're getting everything Elliott wave just included in the cost of the subscription. After January 1st, you're going to have the option to buy the Armando. You're not going to get any of my stuff. You're just going to get Armando stuff, which is an amazing deal. I highly recommend it at less than $1 a day. The pricing is going to be a no-brainer. You're going to get the Elliott wave stuff for an additional $6.18 a month. I couldn't resist using a fib number, a fib level for the price. So Armando and I agreed. So going forward after January 1st, anybody that joins the Professor Trades Club, if you want the Elliott wave stuff, it's an additional $6.18 a month, which is still like, I mean, I'm 5 years into this. I put in way over 10,000 hours learning it. And it's of great value to people that understand what the levels are showing you and how to include these parameters in your trade plan. It's really great for seeing the things that a scalper day trader may not necessarily see. It also helps when you're at all-time highs. Elliott wave still has levels and targets up there, whereas if you're purely a resistance, supply demand trader type guy and you get the all-time highs, you don't have much reference points up there. But Elliott wave always has reference points because it's all about the Fibonacci, and Elliott wave is just a special methodology. Anyway, that's the deal. Join the Professor Trades Club now before January 1st. You're going to keep getting the Elliott wave stuff at no extra cost if you join now. After January 1st, it's going to be $6.18 more. Okay, cool. So let's hop back into the chart, Nasdaq. Really, what I'm guessing at is that this is a three-wave correction. It sure did come up in three waves. Came up a little short, but it did hit this key level of the 764 to the penny, and then it got rejected and came down. So just as I was describing, not that they're related, but just as I was describing in the silver chart, or was it the silver chart or the gold, looking for a wave 4 versus the low is in, because this is also 3 down. So, could you twist your head around and bend yourself over backwards to make this 5 up, and this is a 3-wave correction and the low is in, and now we're going to go higher? One way we'll know, and that's what this X is about over here. If price can get above 21,870, then I maybe did wrong, and this is not getting a wave 4. It's already hit the minimum for a wave 4, which is this blue box 382. The ideal, like perfection target for wave 4 is for this to come up. I've got this as an ABC. I didn't label it, but let me just throw, now that you guys are probably figuring out that doing analysis is repetitive, trading is repetitive. You find out what works, you keep doing it over and over again. So the yellow fibs represent any 3-wave move in my charts. So whenever you see yellow fibs, you can believe I'm looking for a 3-wave move. In this case, it's a potential ABC. It's also possible that this is already topped out because there's already a 3-wave move inside of there, because A waves can be made up of 3 waves or 5 waves. In this case, I'm counting it as 3 up for an A wave, then a B wave, and then now we're in a C wave. But it's important to know that we are already in the box for where wave 4 may be, but the real line in the sand is 21,870. The ideal target, now look, remember I put the ratio box on that other chart. I'd already put it on this chart. So there are a few fibs in white. Let me make these a little brighter so you can see these levels. For the Nasdaq on the 1-hour chart, you can see we came down in 3 waves and hit the 2382 fib to the penny, more or less. I mean, within a few pennies. And then now we got a very strong reaction off of that. A 100 fib is also not an unusual fib that a wave 4 targets, but the real line in the sand is the bottom of wave 1 to avoid overlap. So as long as you stay below 21,870, there is no overlap, and that allows for the pressure to remain to the downside, and then we come down here. And then, I know it's going to sound crazy, but Nasdaq could get another high. Wow. So maybe the top is not happening yet. So to put this in perspective, looking, actually, damn, I just reminded myself, I'm sorry. So looking at the longer time frame chart, let me revise what I just said. This would be wave 1. Sorry, way ahead of myself. This would be wave 1 of C, which goes much lower, which, by the way, if you notice the consistency, wave 4, we're tracking wave 4s in these multiple instruments. That's why it can be confusing, because it sounds like I'm talking about the same thing, but I am talking about the same thing because it's Elliott wave, but I'm not correlating these charts at all. Okay, so if this comes down in this box, look for a 3-wave move, probably right back up to the same area. And then you get a chance to trade for wave 3 of C of 4. And that would be the most profitable wave. You could take the rest of the year off if we do this right. Because this is what I'm showing you. If we can get containment up here for this nano wave 4, and then get a 5-wave structure down, this would be considered wave 5 of 1 of C of 4. Now look, if you're an Elliott wave guy, you have no problem with what I just said. If you're not, turn off your brain. It's much simpler than you think. Much simpler. Wave C waves, great majority of the time, almost all the time, are composed of 5 waves. Because of the position of where this three-wave structure is, A, B, C. Wave 4 should be composed of three waves. So I'm piecing together a bunch of things that Elliott wave methodology teaches us and creating a picture that no other methodology can create, in my estimation. So there you go. So back to actionable levels, 21,870, and you want to see it come down here and break 21,500. And if it does, you want to see it come down and get to at least 21,353. So that's 150 points worth of short scalp in here. And there's 150 points of short scalp if you wait and get into it over here. Like wait to see where this is going to top out at. If I had to put a sell box, like if somebody held a gun to my head and said, I want to go short, give me a short signal, it's probably going to be down here. That's one of them. So let me just label that. And I also am putting that on there for my own clarification. And then I've already got a sell box up here. That would be midnight. So we'll see what happens at the open. And, you know, is this going to come up and get up into here? It would suck if it keeps going. But if it does, the next real parameter is 22,184. Man, I don't want to see that come up into this zone. That's why that X is above here. There's also some timing considerations here, but basically, I've said enough. All right, last thing, dollar. Look, dollar, I've cleaned up my dollar chart. Simple, right? It got complicated because I'm measuring all sorts of things. There is a distinct new possibility that I haven't talked about because now these fibs were on my chart. This 1618 has been on my chart, but I don't talk about it because I wasn't expecting to see it. I was using the 100 fib that I actually put over here in yellow as the target. Once we were over here, this was my target. Well, we hit the target right in the box and got rejected. So that was fantastic. What's not fantastic in terms of what I was thinking over here in yellow, ABC, is that we made a new high. We came up here and popped above there, above this 100 fib. So these fibs over here, they're the same exact fibs, it's just in a different location. Okay, so we got above the 100 fib after getting rejected at it initially, held this area very nicely, and then they're coming up, you could argue, impulsively. So what's my point? Here's my point. You're going to watch me change this. I really don't even want to get into these levels, but these levels are no longer right. So really what it could be now, well, it could be a few things, but this could be a 1, 2, 3, 4, 5 up into here. It could also be a nested 1, 2, 1, 2. So I'm not going to get into the labels. I'd rather present you with parameters and just some Fibonacci. So real simple, the 100 fib is at 110,211. If price gets above 108,535, let me see what, okay, I'm sorry. I want to see one thing. Yeah, that's kind of it. I was thinking if I wanted to put a long box, I wouldn't just go long just because it poked above here. But there is a point at which if it keeps coming above this, like here's what I would do. If it came up, not just a little bit, like a few hundred pips, if it can come up and then it comes back down and holds this level, okay, then yes, I think it's going to go up to at least 110,211. If it's going to do that. Otherwise, you know, this is resistance. It is getting rejected, but it's consolidating just below there. So these parameters, I think, are really the important ones. Okay, 108.53 to the upside in the dollar. 106.730, which is this consolidation zone right here. If it can't come back down and hold that, and it comes through it, then I think it's more likely you're going to see 105.420. If you're going to see 105.420, the next area of support, this is tricky, but I'm just going to, for now, I'm just going to move this over just to remind myself that there is price action to the left in this area, in this zone. All right, so it's really, I can really only give you these parameters because of the way this is moving, It didn't do what I was hoping it would do, which would have been much cleaner, which would have had this at the top of a C wave. It's now broken above that. So the best I can do is say 108.53, 110.211, and then immediately to the downside it's 106.730 and 105.420. Okay, those are the key levels for the dollar. And the real reason I'm paying so much attention to the dollar is, you see, remember that key level I was just talking to you about? That would be just finishing off this B wave. This is a weekly chart of the dollar. And again, this is another thing about Elliott wave that is just so kick-ass. It's worth the headaches and the hassle to learn it just for the context that it provides. This is a weekly chart. Why am I talking about a weekly chart? Because a weekly chart is giving you better clues, although it's much harder to day trade and scalp using a weekly chart. In fact, I'm not day trading or scalping using a weekly chart, but I am using it to give me context of what's going on at the lower level. So at this high level on the weekly, I'm viewing this as a B wave. And I remember thinking that this is not enough for a B wave. Okay, and here we are. It's coming up, making a new high. Ideally, if this wants to come up again, and that's that level we were just looking at, by the way, this red line right there, we were just looking at 1853 that opens the door to 110.211. What's the top of that box? Just call it 111 up here. Just call it 111. Just above the 618 is 111. So the 111 is just shy of the 764. So are you starting to understand the context here? So the larger time frame is giving us an acceptable area for where a B wave should terminate. The lower chart time frame, which in this case is a 2-hour chart, is giving us some ideas of where this might terminate based on the overall structure here. This is just Elliott wave basics I'm talking about here. So we go back and forth between the 2-hour chart and the weekly chart, or the 4-hour chart, or the daily chart, like I've been doing with all these other instruments. I just happen to be using the weekly on the dollar because the weekly, to me, is the one time frame that is the clearest and the cleanest. So this is really the target, is back down here in this blue box, which I haven't really talked much about the count, but this would be wave 3, and then we're looking for an ABC for wave 4, which should terminate in the blue box. This wave down did not make it to the 382. Is it possible that wave 4 is done? Yeah, it is possible, but because of this structure, if wave 4 is done, you know that wave 5 should be composed, even if it's a diagonal, wave 5 would be composed of an ABC move, but you should still see something more impulsive looking off of the low. If this is the low of wave 4, this does not look like, hey, the correction's over, we're going higher. This looks like, hey, we're consolidating and still trying to figure out what we're doing. That's what this price action looks like. So when we go down over here, we can get more in the weeds, which we are on this 2-hour chart. And even if I zoom out on the 2-hour chart, you can kind of see it's possible that this is an impulse. And then if it is, these are the targets where you could expect to see this impulse terminate. That's why I'm talking about them. That's why they're there. And in relation to the weekly chart, you just know what that's going to look like. It's going to look perfectly fine for a B wave to come up. Where it ain't a B wave is above 113.04. When we get above the 886, I mean, could it be a B wave still? Yeah. But based on the way this is counting and where it's hitting, the fibs that it's hitting and how it's moving, I don't think it goes above the 886 way over here. This is the ideal target for this B wave to terminate. And then if it starts coming down impulsively, it's highly likely you're going to get into this blue box. So there you go. That's really all I need to keep talking about, right? You've got what did I do? I did crude oil, I did gold, I did silver, I did Nasdaq, and I did the dollar. And you can see uncertainty abounds. We're coming out of a holiday weekend. So what is the context overall of the markets right now? Well, we're coming out of a holiday stretch, low volume. Give it another week. I wouldn't be surprised if the dollar chops around this week as well. It's going to make a move at some point. It's either going to break out or break down. Same with the smaller degrees on gold, smaller degrees on silver. They're either going to break out or they're going to break down and finish off their downside corrections soon. And then you get a rip-roaring move in metals. Oil, I'm bearish overall. I think it needs to go down and see below 60. Just because of what I just showed you. Anyway, that's the deal. If you're getting the value, thank you guys so much. I really appreciate you guys buying me the coffee. I didn't talk about it the last couple of videos. Thank you. There's a link in the description for coffee, K-O-F-I. It's just an energetic thing. When you buy me a coffee, it's like it creates this support in my desire to keep doing this and posting these videos. Because I do it mainly because I love it and I like teaching. But you guys, when you give me feedback or feedback in the comment section, it encourages me to keep going. I know they're kind of long-winded. I'm working on that. Hey, give me some feedback too. If you're watching my videos regularly and you made it all the way to the end, will you do me a favor and drop me a comment? Or if you only watch the first 10 minutes of my video and you're thinking, man, this is cool, but it's too much. Just get to the point, like give me the levels. I want the levels. If you just want the levels, well, you're not watching it by now if you just want the levels. So if you're getting value and you're watching the whole thing and you want me to keep going in that manner, drop me a comment, would you please? Maybe I'll start announcing this at the beginning of the video to ask everybody to drop in the comments whether you like the longer form videos, 28 to 35 minutes, or you like the short videos, 10 minutes. Because I could do 10-minute videos and just give you the levels, but then there's not going to be as much educational stuff. I'm not going to be explaining as much stuff. I'm just like, hey, look, here's the levels. This is wave 3, or it's a B wave, or this is a blah, blah, blah. But, you know, once you get familiar with my colors, you're going to know that wave 4s are almost always in blue. When I'm measuring for a wave 4, it's going to be in blue. Anytime I'm measuring for a 3-wave move, it's almost always going to be in yellow. If I'm measuring a B wave using a box, the box is going to be yellow. If I'm measuring for a wave 2 or any other correction that's not a B wave or a wave 4, I'm always using gray colored fibs, and those almost always include the 50% fib, the 618, and the 764. Whereas B waves more are likely to be 618, 764, 886. I mean, I can teach all day long, but it's too much, right? It's overwhelming. I'm just yapping. So give me some feedback. You know, I'm thinking out loud because sometimes I think I should just do 2 videos. Just do a 10-minute video and then do a longer video with more, just picking one instrument. Because I can teach educational on Elliott Wave and just use one instrument. I don't have to give you all these different instruments. Maybe that's part of what slows me down. Maybe I should just give one instrument where I go in depth and really explain Elliott Wave, and then the other instruments I'm just giving you levels. So you get a little education if you want, but you can also just breeze through and grab the levels. All right, now that I've really gone overboard, woo, maybe because I'm at the beach and I'm just enjoying life. Hey man, thanks for watching, guys, if you made it this far. Take good care. See you in the Professor Trades Club. Bye-bye. Happy New Year.